Thank you very much for joining me here today. To start off, North Korean leader Kim Jong-un said Pyongyang would not hesitate to launch a nuclear attack if an enemy provokes it with nuclear weapons. This is according to state media on Thursday. Here's a report.
Kim made the remark as he and his daughter met with soldiers working for the military's missile bureau. According to state media, Kim congratulated them on this week's missile launch, which has been widely condemned by the US, South Korea, and Japan. North Korea on Monday fired an intercontinental ballistic missile that, according to Japanese officials, had a range of more than 9,000 miles and could hit anywhere in the US. At a meeting of the UN Security Council on Tuesday, Pyongyang was widely criticized.
We have used every word to describe the DPRK's continued threats to international peace and security. Flagrant, unacceptable, reckless, egregious. All of these words still apply. But today, I offer another word, ridiculous.
I must begin by expressing once again our condemnation in the strongest possible terms of the utterly unacceptable provocation by North Korea in violation of multiple Security Council resolutions.
The US and South Korea have increased the intensity of joint military drills, with South Korea's defense ministry releasing footage of soldiers shooting targets. Along with Japan, they have also activated a new system to detect and assess North Korea's missile launches in real time. Washington had until now shared such information separately with South Korea and Japan. North Korea has slammed the new system as part of U.S. efforts to incite confrontation. It says it has a sovereignty right to operate a ballistic missile program for self-defense.
And Wall Street's main indexes ended the session down yesterday after an abrupt mid-afternoon nosedive, ending an impressive rally. Here's a quick recap of markets.
U.S. stocks closed lower on Wednesday after an abrupt mid-afternoon nosedive, ending an impressive rally driven by falling interest rates and the Federal Reserve's dovish turn. The Dow shed 1.3%, while the S&P 500 and NASDAQ each lost 1.5%. During the session, the S&P got within 0.5% of its all-time closing high. Reaching a new closing high would have confirmed the benchmark index had been in a bull market since hitting its bear market floor in October of 2022. The index is now more than 2% below its record closing high. Stocks have rallied on the back of the Fed last week, signaling it had reached the end of its tightening cycle, while opening the door for rate cuts in the coming year. Still, Ross Mayfield, investment strategy analyst at Baird, suggests caution for 2024.
We still think that even if the Fed is cutting rates, the floor under rates is much higher than it was in the previous cycle. That raises the bar for company performance and profitability. I think sticking with a quality tilt across sector, across asset class, whether in fixed income or equities, is going to be something that's really important over the next couple of years.
In company news, shares of General Mills slid more than 3.5% after the packaged food company cut its sales forecast. FedEx shares slid 12% after the delivery firm missed quarterly profit estimates and cut its full-year revenue forecast. Rival UPS dipped 3%. Alphabet gained more than 1% after the company announced it was restructuring Google's ad sales unit. And memory chipmaker Micron Technology, which closed down more than 4%, gained 5% in after-hours trading after forecasting quarterly revenue above Wall Street estimates.
Supply chains could be disrupted ahead of Christmas after the government closed a Texas-Mexico trade route over increased migrant crossings. Businesses are now calling on the U.S. government to reopen the route. U.S. border authorities closed rail bridges in Eagle Pass and El Paso on December 18th to redirect staff to process migrants crossing the border. An international report showed U.S. Border Patrol caught nearly 11,000 migrants on Monday at the southwest border. The U.S. Department of Transportation reported that rail freight between the U.S. and Mexico in both directions accounted for nearly $9 billion in October. And Union Pacific said on its website as well, a range of products have been halted due to closures, including grain, metals, and car parts. And exporters are scrambling to find alternative air, land, and ocean routes to get toys, apparel, tea, auto parts to retailers. This is as disarray ripples through freight supply chains around the world due to a wave of attacks in the Red Sea. Here's more.
As the crisis in the Red Sea deepens, exporters are wondering how to get their goods to market. Iran-backed Houthi militants in Yemen have stepped up attacks on vessels in the area in recent weeks. That's to show support for Hamas during Israel's military offensive in Gaza. The attacks have disrupted a key trade route linking Europe and North America with Asia via the Suez Canal. It accounts for about 10% of global GDP. Now major shippers including Maersk are sending their vessels around South Africa instead, a safer but much longer route. That has exporters scrambling for alternative air, land or ocean options. One German freight firm said customers were looking at so-called intermodal routes. For example, ship part of the way, then plane for the final leg. But air cargo capacity is limited, and it costs many times more than shipping by sea. Analysts at S&P Global say that leaves major retailers like Walmart and IKEA looking vulnerable to disruption. The crisis doesn't look set to ease anytime soon. On Wednesday, the leader of Yemen's Houthis warned that they would attack any US warships that attempted to intervene.
We will not stand idly by if the Americans attempted to escalate further and commit foolishness by targeting our country or waging war against it. Any American targeting of our country will be targeted by us. And we will make American warships, interests, and navigation a target for our missiles, drones, and military operations.
Washington has promised to establish an international naval task force to protect merchant vessels. But shipping firms say they are in the dark over when or how the force will operate. Meanwhile, they've started hiking fees for cargoes passing through the Red Sea area. United Nations trade expert Jan Hoffman says it all spells trouble for consumers, albeit not immediately.
So if you have systematically higher shipping costs for manufactured goods, the consumer goods that you and I buy in the shop, it takes many months to really translate into higher prices. But it will come.
The extent of the impact will depend on how long the disruption lasts. One US-based shipping firm told Reuters it was advising clients to prepare for at least 90 days of trouble.
Americans may have to prepare for increased oil and gas prices, even if just a bit, as freight companies avoid the Red Sea, which is under attack by militants supporting Hamas. Companies have seen a sharp rise in costs to find alternative routes to the Suez Canal. Before the attacks, the key route between Europe and America with Asia saw as much as 8 million barrels of crude oil a day. Traffic has fallen since Iran-backed Houthi militants started targeting vessels in November to show support for Hamas in its war with Israel. Companies like BP and Equinor have been forced to reroute or pause shipments altogether. Reports show rates have gone up 25% to transport crude from the Middle East to Europe. And a source says insurance has skyrocketed to $10,000. Experts say the impact on the oil market will depend on how long the Houthi attacks continue to disrupt shipments. And as 2024 comes into view, investors, economists, business leaders, and everyday consumers share a common hope that interest rate cuts are coming. Here's more.
Investors, economists, business leaders, and consumers all share a common hope for 2024: rate cuts. Some economies like the UK and Eurozone could have to wait until later in the year due to stubborn inflation and strong wage growth. But others, like the US, may see them as early as the spring. Here's Reuters economics and financial markets editor for the Americas, Dan Burns.
Well, some borrowing costs for consumers and businesses have already started dropping just in the expectation that policymakers at central banks will cut their interest rates in 2024. Now, will they keep dropping at that rate? That's unlikely, but it's a pretty strong expectation that home loan costs, credit card costs, business loan costs are going to be lower in 2024 than they are right now.
After starting 2023 with annual inflation rates that were on average 3.7 times the 2% target shared by most developed economy central banks, the pace of price increases is now down to 1.5 times that target.
Now, if at some point inflation stops improving, that's going to make central bankers edgy and less willing to bring down borrowing costs. But if the kind of progress that we've seen on inflation in the last few months holds course, that will give confidence to central bankers to begin lowering borrowing costs in the first half of the year.
But a major game of chicken is underway as market actors have set expectations for far more easing than central bankers may be willing to provide.
The Federal Reserve, for one, recently forecast 75 basis points or 3/4 of a percentage point in interest rate reductions over the course of 2024. Financial markets, the bond market, interest rate futures markets, are now pricing expectations for 150 basis points, essentially twice what the Fed itself is forecasting. At some point, one of these parties has to be right. Potentially they meet somewhere in the middle, but somebody right now is going to be disappointed. And if recent history is any guide, it may be markets are a little bit overextended in their optimism for how far rates are going to drop next year.
But the key to it all rests with inflation. As policymakers have said, they're willing to stomach some level of economic pain to finally return price pressures to their target levels.
And now let's talk about the US dollar. Its value was already expected to decline next year, but now financial experts believe the Fed have strengthened the case even more. Strategists predict that a faster pace of rate cuts would accelerate the currency's decline. This month, the Federal Reserve made a dovish pivot from its aggressive rate hike campaign. It kept rates unchanged during its last meeting. And policymakers now project a sharp 75 basis point cut next year. The US dollar soared to a 2-decade high during the Fed's rate hikes. Now it's on track for a 1% loss this year compared to other currencies. Predictions on the greenback's decline are based on cooling inflation. Now, whether you're giving or receiving a gift card this holiday season, listen up. Check carefully to make sure you're not falling for a scam. The Better Business Bureau is warning that gift card scams are surging. Here's more on how you can protect yourself.
They're a popular holiday gift idea, but scammers are increasingly targeting gift cards to steal from you.
Gift card scam reports are up 50% for 2023 over 2022, and we're not even done with the year yet.
The Better Business Bureau is reporting a surge in gift card scams, warning that scammers could be tampering with gift cards and stealing barcodes, or targeting online shoppers and asking them to pay with a gift card that's not from the retailer.
That's a huge red flag. There's a lot of scams that are perpetrated where the scammer is asking for a gift card, such as like a grandparent scam or a utility scam.
The BBB also warns consumers that scammers use other tactics to steal from them too. Before you buy a gift card, here's what to look out for to avoid becoming a victim. 1. Check for stickers covering the barcode by rubbing your finger over the back of the physical card. The stickers may contain a phony barcode, and when it gets scanned at checkout, you'll unwittingly be sending that cash to the scammer's account. 2. Be careful of websites that check your card's balance. The BBB says some sites could use your card's ID number and PIN and drain money from it.
When you buy a gift card and you give that number and that PIN to somebody, that money's gone. So it's really important to know who you're giving it to and what they're going to use it for.
And finally, check for ripped or wrinkled packaging. The BBB says thieves often remove gift cards from the display rack and record the numbers linked to that card, including the activation PIN.
Now, a warning for shoppers opting for the buy now, pay later option this holiday season. Many advertise as zero interest, but they can actually be higher. The increased use of short-term loans is adding to more than $1 trillion of credit card debt that's already outstanding. Consumer advocates worry the buy now, pay later options nudge shoppers who are already in debt to buy when they can't afford it. They also said the months-long loans have rates that can top out at 36%, which is the maximum lenders can charge in many states. Buy now, pay later can also negatively affect people who aren't in debt, since the loans don't generally build credit but can hurt credit scores for missed payments. And TikTok's parent company, Chinese tech giant ByteDance, has admitted it's using OpenAI's technology to a limited extent to develop its own AI models. OpenAI owns ChatGPT. ByteDance's admission came after OpenAI said it suspended ByteDance's account over questions about how its GPT data was being used. A ByteDance spokesperson says the company is licensed by Microsoft to use the GPT application programming interfaces. And The Verge reported ByteDance is secretly using OpenAI's technology to train its own large language model, which is in violation of actually OpenAI's terms of service. ByteDance's ChatGPT-like tool is called Doubao. The company says it uses its own self-developed AI model to power this model, which is only available in China. And Forbes has included Barbie in this year's list of the world's most powerful women. She's the first fictional character, actually, to be chosen for the list. Forbes pointed to her 2023 Warner Brothers movie as governments roll back women's rights. The publication says Barbie emerged as a symbol not only of female empowerment, but also of the need to fight to recapture power that's been taken away. Since her debut in 1959, Barbie has worked 250 different jobs. They include entrepreneur, architect, astronaut, and even U.S. presidential candidate. The Forbes list of the world's most powerful women also include Kamala Harris, Taylor Swift, Oprah Winfrey, and Beyonce. Toyota Motor shares slumped on Thursday as Japan's transport ministry inspected a subsidiary over safety concerns dating back decades, and as the world's top-selling automaker separately announced a recall of 1.1 million vehicles. Here's the report.
Toyota shares slumped Thursday as the auto giant faced a deepening safety scandal. The problem originates at subsidiary Daihatsu. On Wednesday, it said it would stop shipments of all vehicles indefinitely after a safety inspection uncovered irregularities. An independent committee found issues with 64 models, including 24 sold under Toyota's brand. The investigation began after Daihatsu admitted in April it had rigged side collision safety tests. Daihatsu said Wednesday it didn't know when it would resume shipments and warned the impact on earnings would be substantial. Analysts said the damage to Toyota's earnings would likely be limited given the carmaker's size. The bigger impact could be for Daihatsu's suppliers, with a supply chain in Japan made up of more than 8,300 companies. Japan's government criticised the firm and said it would consider penalties. It said it could go as far as revoking the carmaker's production certificate. Daihatsu said it would consider financial support and damages for its suppliers. Separately, Toyota said it would recall 1.12 million vehicles worldwide, mainly in the US. It's to fix a faulty sensor that could cause airbags to not deploy as designed. Shares in the firm dropped 5% Thursday.
And the TSA says its holiday travel period kicks off tomorrow with one of its busiest days, and a potentially record-setting stretch could collide with winter weather. Here's more on how the federal government and airlines say they're prepared.
It's going to be a blockbuster holiday season in the skies, according to AAA.
The thing is, more people are going to be traveling now that they ever have.
With flights near or at capacity between now and New Year's, there's pressure for airlines to keep things moving.
When we see delays, whether it be from weather or just a technical delay in getting a flight out of the gate, it impacts the whole schedule for the day.
And Transportation Secretary Pete Buttigieg says weather disruptions could be on the radar.
We may see some bad weather impacting travel around Christmas and New Year's. FAA is working closely with airlines to plan for that possibility.
But Buttigieg says that 2023 has seen the lowest commercial flight cancellation rate in the last 5 years. And experts deem Thanksgiving, which saw some new holiday peaks for the TSA and airlines, a success.
Obviously, weather delays and cancellations are a very real thing this time of year. But I think In terms of what airlines can control, we've seen improvements, and Thanksgiving was proof of it.
Airlines indicating better preparation for the holiday rush.
We've seen in the last couple of years recovering from the pandemic, staffing shortages, training gaps, impacting not just airlines and airports, but the entire aviation industry. The good news heading into this holiday season is that an incredible amount of resilience has been added.
For the busy stretch between now and New Year's, the FAA has also opened some additional military airspace.
And thanks for watching NTD Business. That's all the stories we have for you today. I'm Don Ryan. We'll see you next week.